The US banking system is about to collapse. Over the past week, the US economy has tumbled. Recent signals have revealed that the economy is already in a recession, the country is being hit with record high inflation, layoffs are happening, there are currencies falling, the stock markets around the world are also crashing, pension funds are in trouble, and if that wasn't enough, the situation with the banking system is going from bad to worse every single day. And today, we just got 3 new shocking updates that tell us the US financial system could be on the verge of total collapse. You see, Jamie Dimon, CEO of JP Morgan, also issued a warning that the US economy is on the verge of collapse.
And this is serious stuff, okay? This is inflation, which obviously is, changing the effect of those numbers I just told you about. It's rates going up more than people expected already, and probably a little bit more from here. It's QT, which we've never had before. So therefore the unknown effects, and you see it today in bond markets around the world and sovereign markets and people selling US Treasury debt, and it's the war. And these are very, very serious things, which I think are likely to push the US and the world. I mean, Europe is already in a recession, and they're likely to put US in some kind of recession 6 to 9 months from now.
He has also previously mentioned similar warnings saying that a hurricane, rather than a storm, is already upon us. And I've been putting out several videos this month saying that banks are in trouble and that we could be in a financial crisis worse in 2008, but much, much worse because the bubble is much bigger. And I've warned that your money is in danger and is not safe in the banks anymore. So let's get right into the news, the facts and data without wasting any more time. Now, before we get into the data, I'm sure we all have seen the videos of Chinese citizens being unable to withdraw their money either due to strict capital controls or bank failures. Now, that's worrying on multiple fronts. You see, the Chinese economy is a big part of the global economy these days. So a financial panic there would have contagion effects across the world. And although Chinese banks are less globally connected than the American ones, due to the massive size of the Chinese economy and financial system, problems with them would have a significant negative impact on global financial growth. And that brings me to update number 1 as to why banks are in big trouble, because what you just heard about China gave you a glimpse into what could be your future and why the most powerful thing you can do right now is to get out of debt and to diversify where you put your money. Because when you have debt, you are a slave to the lender, and this entire system, world system of control, is built on debt. And yes, there is good debt like using it to make money and companies using debt for working capital. And with that in mind, there is a very interesting story with PayPal right now. The other day, PayPal pulled back its decision to fine customers $2,500 for misinformation. They pulled out their decision after getting massive backlash. So they backtracked on a published policy that would have fined users $2,500 for spreading misinformation, claiming the update had gone out in error. They said the update included incorrect information. PayPal is not going to fine people for misinformation, and this language was never intended to be inserted in the policy. But here's the thing, what companies do is that they spread out information of something they want to do, and they see what the public would do with it. We've already seen this in the last few years, especially activity within the mainstream. They see how the market would react and just retract any information and take it back if they don't see any positive feedback. And I'm going to let you know that essentially, for all accounts and purposes, PayPal is a bank. It has banking services, it has deposits, it has withdrawals, it's a bank. And even though it doesn't seem like a bank, there's a lot of online banks all over the world, and I know people that are in this space that have their accounts only on online banks. They do not have any physical branches. People need to realize what's going on right now, and it's actually very scary what's happening right now. And before I go on to tell you about the second update you need to know, I want to give you a little definition of a bank bail-in as opposed to a bank bailout. You see, a bank bailout helps a financial institution on the brink of failure by requiring the cancellation of debt owed to creditors and depositors. Bail-ins and bailouts are both resolution schemes used in distress situations. And bailouts help to keep creditors from losses, while bail-ins mandate that creditors take losses during the 2008 Great Financial Crisis. And a new system was put in place through the Dodd-Frank Act. And bail-ins were pretty much adopted at the point at where bail-ins makes the depositors of a bank an unsecured creditor of the bank. Now let me start by saying that I believe that when this collapse happens in the current financial system, not every bank will do this. And I also believe that it's very important to diversify the type of banks you have and how many banks you have, because it's important to have large national banks that can do international banking if that's what you need to do. So you need those kind of banks to do that kind of banking, then you need large regional banks, and you also need small local banks and credit unions. Now, if you feel like you're getting value from this video, then please share it and like this content so we can let as many people know what's happening in the banking system. Now, when I say get your money out of the banks, one of the options here is to put your money in credit unions. And the reason that I like credit unions, because they are, for one, and they're local, and so you usually have a cell phone number or somebody that you can call over there, and if you're having a problem, they can get it fixed right away. So that's a whole different system because they're operated as a non-profit, and so you're actually a shareholder there. So the bottom line is that it would be a much better option to be involved in a credit union. But when I say get your money out of the banks, that's what I'm talking about. Get your money diversified so that you can have access to it just in case something happens. That means you have money sitting in multiple streams that you can get to at any point in time, because it's going to happen where you're going to have these issues pop up. You might think that you're a one-off, that it only happens to you guys, but these things happen to everyone, and the banks make a lot of money on fees. So get your money in with credit unions, and it doesn't mean that you should get rid of big mega banks, because you should still have them, especially if you're doing something international or even over state lines. The credit unions are a little bit harder to deal with, and I will tell you that credit unions are going to be a lot less likely to do a bail-in, but it doesn't mean that they can't do it, but it means that they are a lot less likely to do it. And if you're relying on an FDIC insurance, I'm here to tell you that you should not rely on FDIC insurance, because there are many loopholes in there where they can actually get out of paying you through your stuff. So you might think that if you put it in a money market account thinking that it works respectively like a savings account, well then it's an investment account and is not FDIC insured. There's all these different things going on there. And by the way, I'm not a financial advisor, so I'm just telling you from experience, from my understanding of how this stuff works. And it sounds crazy, but the way that I've always lived, and it's worked for me, and I've also been able to sleep well at night, is that I have multiple banks with money spread out, and then I also have money that's going to be sitting for a while. I have specific credit unions and small banks in savings accounts that is not attached to a credit or checkings account. They'll always try to talk to you into that because there's little loopholes that make it to where FDIC insurance does not always cover you. So I always put it in just a pure savings account for money that's not gonna be moving around, and it's a savings account not tied to a checkings account. So always diversify so you can always be prepared. But now that you know how to keep your money secured, here's the final reason as to why I believe we could see complete destruction of the financial system. Because it seems like everyone in the UK is in huge trouble. They have the highest inflation of all major economies, but they're having to bail out the entire bond market, and their pension funds are nearly going bust, when all other central banks around the world are doing quantitative tightening, or in other words, selling assets like bonds and mortgage-backed securities. Now the Bank of England is having to buy again and turn the printer machine on back again. And this is like throwing gasoline on a fire, and it's going to make the inflation crisis in the UK much, much worse, and we're going to be facing a similar situation like this in Australia, with the Reserve Bank of Australia backing down with their rate hike, as they were meant to raise rates by half a percentage point. And they only did a 25 basis point hike, and that has led to the Australian dollar to crash, and this is going to continue to happen to other central banks around the world. And guess who could be next? You see, there are states passing out stimulus checks to fight inflation, and the OPEC Plus cutting oil production will only make inflation worse. But remember that the whole global economy is interconnected. So Jamie Dimon, CEO of JP Morgan, is sending out a warning, just like the Bank of England is showing now, that we are in a financial crisis, and there is simply no way we can get out of this without any major pain. Because either the Federal Reserve lifts interest rates to stop inflation, or we face a severe depression. And the only thing that central banks can do is to try and bail out their financial system, but it's going to make their currency absolutely plummet. And we're starting to see the first domino effect fall in the global financial system, and we are starting to see how all these banks are connected. And China, on the other hand, is emerging as a short-term better solution than most costly investments, such as building a new factory close to customers. And keep in mind that what has been happening in the past 4 years is that we've had a huge supply chain crisis. And this is why inflation has gotten so bad, and there's still shutdowns happening in China right now, so things are not getting any better, especially with the relationship between the US and China, which is getting much worse. So what a lot of companies are going to do is they're going to take their manufacturing and they're going to have to go to other options. Even manufacturing in the US, even though it's more expensive, but US retailers are now saying, look, there is no point of me manufacturing in other countries if I simply cannot get the goods, if the goods are not getting made and aren't getting to the shelves in time. It doesn't matter how cheap the manufacturing costs are in China. So this whole globalization has led to low inflation because companies having out of their production for cheaper and cheaper labor and cheaper costs, but that has now come to an end, and globalization has piqued companies and they're going to bring them back soon onshore or to other more expensive options. And that just means that inflation is not going to go away anytime soon or overnight. It's going to take years to go away, so interest rates are going to have to go higher for longer. So, well, what does this mean for everyone, for the average person? Well, in simple terms, what this means for everyone is that the biggest bank in the US is preparing for a recession.
The US and the world, I mean, Europe is already in a recession, and they're likely to put US in some kind of recession 6-9 months from now.
So let me know your thoughts down in the comments below, and please be sure to share this video so we can let as many people know about what's happening in our current banking system. Again, thank you guys so much for watching. Until next time.